Hi, I'm Lucy Eckermann from Duncan Bashir Hannon. I'll be talking to you today about modes of property ownership. I hope you enjoy the show.
Yeah.
Now, young Lucy, how are you?
Very well, thanks, Greg.
Good. Took a tumble off your bike. Well done.
Yeah, it happens.
It happens. That's life. Now, life in Duncan Bashir Hannon, busy?
Yeah, definitely at this time of year.
Yeah, very good. Now, you wanted to talk about how we hold property. How do we? How can property be held?
Yeah, well, there's a few different ways in which property can be held. Firstly, solely, which quite obviously is when one person holds all the interest in that property. Otherwise, you can hold property jointly, and there's a few different ways that joint property can be held. We have a joint tenancy or a tenancy in common.
Do you want to speak about joint tenancy first? What do you mean when a property's held in joint tenancy?
Yeah, well, this means that two or more people hold the property jointly in equal shares. And on the death of one of those joint owners, the property will automatically pass to the surviving joint owners.
Okay, so
I guess
if I'm married, so Christine and I own our property, if it's joint tenancy, and I fall off my bike and cark it, she gets the property. Doesn't matter what's in wills or anything else.
That's exactly right. So the important thing to note there is that you can't bequest a joint interest in a property to anyone else because it's going to pass automatically to the joint survivor and therefore won't form part of your estate to bequest in the will.
So it can be joint tenancy. What about tenancies in common?
Tenancies in common is where each joint owner owns their individual interest in the property and they can deal with that as they see fit. So should they decide to leave that to someone else in their will, they can do so. Yep. And tenants in common can own the property in unequal shares as opposed to a joint tenancy.
Can you change them over? So if I'm in joint tenancy, I'm going, oh no, I don't want my wife to get it all. Can I actually change it to...
You can, yes.
Yeah.
I guess what you need to be aware of is possible stamp duty that may be payable if you actually change the shares that are held. So if you're going from 50-50 joint tenancy to 50-50 tenants in common, that's fine. But if you're changing it to 80-20 or something, then there's going to be stamp duty implications.
And of course your fees to do the transaction. Is it an expensive exercise?
For that sort of transfer, no, it's fairly straightforward.
Yeah, very good. All right, Will, what fees do we incur when purchasing a property? You know, I suppose we're talking about the mortgage, are we?
Yeah, well, actually, probably both. Both the mortgage and also for the property transaction itself. And we all love to hate fees. I'll start with the government fees for the actual property transfer. We're talking about having a stamp duty. We're talking about having a transfer fee for the actual transfer of the name, which Lucy would deal with, and also the registration of a mortgage are the three most common, and obviously the legal fees that are associated with that. And generally speaking, no matter what sort of property you're going to be buying, you're going to incur some sort of fees with regards to the government. The other side of it is, of course, the bank fees, and generally speaking, we try to avoid these. You've usually got three major fees. One is an establishment fee.
About how much?
Usually, well, we try to avoid it where we can.
Yeah,
Our job is to try and
get
minimise
those down. Well, that's my next question. But about how much are they for them?
Generally speaking, between $500 and $700 is what you should expect with most of the majors. Ongoing fees, somewhere between $8 and $12 a month. But again, there are some lenders that avoid those with certain loan products. And then you've got the big one, the hidden one, which is a deferred establishment fee. And this
know about that one?
I've experienced that one, yes.
A lot of people don't actually know about it, and if they do, they don't really think about it. It's a fee that's charged if you actually get out of your loan too early. So, in essence, if the bank hasn't made enough money out of it, they charge you. So if it's less than usually 4 years, you're up for about $1,000 with most of the majors. There are a couple of catches which I will just point out, which is along the lines of some banks charge a percentage base of the loan amount. So they might say that
wouldn't be good.
2% of like $400,000, you're going to pay $8,000 just to deferred establishment fee. So it's really worth investigating that one.
Well, I didn't know about that. I thought if it was a fixed loan, I got it. So say I fixed for 3 years and I got out early, I got it. But you're saying if it's even variable, and I get out within a time frame, I'm up for some fees.
You're up for some fees.
I did not know that.
Yeah, absolutely. And it is a hidden killer, and it can be one of the reasons why people decide that, well, they're going to stay in a more expensive, like as far as interest rate, type loan and not able to get out of it.
Good one, Will. Glad you brought that up. Now, you've mentioned it before. How can we save some of those fees?
Well, firstly, we would say understand what you're going to be doing with the property. If you're going to buy the property and rent it out at some point in the future, if you're going to buy the property and going to, have to sell it within a couple of years, say, for instance, you might buy it, do it up and sell it, then you need to be aware of what those fees are going to be up front. And don't just look at the upfront fees. There's the back-end fees as well that you need to be aware of.
Yes.
The other thing is, of course, some banks will charge a slightly higher interest rate, but lower fees. For lower value loans, that might actually be the way to go, because even though, say, a 0.1 or 0.2% differential might sound like a lot, on a $100,000 loan, it might not actually be that much, and you might save more just by avoiding the monthly fee.
So if Lucy wants to go through that, you'll go through that whole scenario with her, you work out what her fees structure is and
exactly
what's
right.
the best thing to do.
Yeah, we would say this is what your loan structure is going to be ongoing, and let's find the bank and the loan that has the best fee structure for it.
Okay, so next time you want to charge,
yeah.
use your man. Lucy, thanks, Will. That's an interesting one.
Good one.
When would spouses be likely to transfer? Sorry to flip and flop a little bit, but back to, because I find it quite fascinating that I didn't realise the importance of tenancies in common and the other ways of doing it. When were spouses likely to change ownership, or when would they transfer their interests?
Well, it might be a case of one spouse, say, going into business and wanting to protect the family home and decide that, to transfer it to the other spouse. Where transfers are occurring in relation to the principal place of residence, there's an exemption from stamp duty, so that makes it far easier for spouses to transfer to one another. I guess other situations in which it occurs might be, for example, in a second or subsequent marriage where spouses may have children from former relationships and they want to be able to provide in their will for those children. So they may decide to change from, say, a joint tenancy to a tenancy in common so that they own their share in the property and they can leave that to their children in their will.
Absolutely. Really important, isn't it?
Yep.
Important we get it right. Now, how would I know? How would I know which method I've got?
Well, if you're unsure as to how you hold your property, you need to look at the certificate of title, and you can get a search copy of that if you don't actually hold the original title.
No, the bank's not mine. Well, hidden away somewhere.
So you can go to the Lands Titles Office and get a search of the title. That will state how the property's held. So if you own it jointly with someone else, the two names will be registered on the title, and then there will be some sort of wording which indicates whether it's a joint tenancy or tenancy in common. If there's nothing specified, and it's just the two or more names there, then it's a joint tenancy. That's
it goes
deemed
straight to joint tenancy.
That's right.
That is excellent. Thank you very much for bringing that to our attention. I think it's a really important one, isn't it, Will? I mean, we've got to know how our property's owned and the ramifications if something happens to one of us.
We face it with loans as well, and it's a big thing that the banks do ask is what's the ownership of the property, because they want to understand how that legal aspect is structured. Absolutely.
Yeah. No, Lucy, really enjoyed that. One more question for you, Will, before we let you go. Credit card fees, one of my bugbears. They make enough money on the 20-odd% interest they charge, but there's a whole heap of fees as well.
Yeah, there are fees. There's an annual fee very often with a credit card. Some of the banks advertise no annual fees, but of course they jack up the interest rate accordingly. One of the things I probably would point out with these is be aware of what your interest-free period is with these. We don't deal directly in credit cards, but some of our products, as far as lending strategies, offer credit cards with them, and we tend to find that people get a bit frustrated with the interest-free period. You've got to be aware that your interest-free period with the credit card only applies if you make a payment in the specified period in the bank statement. So if your repayments you've got to make a repayment between the 1st of the month and the 14th of the month, you have to pay it entirely off down to zero in order to be able to, get the interest-free period. If you pay it after the 14th, even if you pay the full amount off, you won't necessarily get the interest-free day. So be aware that that's a catch.
These banks are tricky little fellas, aren't they?
They are very clever.
No? Lucky we've got you, Will.
They know how to make money, that's for sure.
Lucy Eckermann from Duncan Bashir Hammond, thank you very much for joining us. Really, really interesting. So just to recap it again, it's tenancy in common versus joint tenancy. Very important we understand how our...
I hope you enjoyed my segment with Greg Moulton. If you'd like to contact me, my number is 8216 3363.